Hey everyone, and a huge welcome back to Eco Wealth Lab. Great to have you with us again.
Absolutely. Hello again, everyone.
So, did you miss us? Maybe you found yourself gazing wistfully at your podcast app. No? Okay, fair enough.
Yeah, maybe a little bit.
Well, look, while you're here anyway, and we're about to unpack some fresh crypto insights, how about hitting that follow or subscribe button? Just a quick tap.
Think of it as casting a vote for more crypto clarity. We appreciate it.
We really do. All right, so today we're jumping back into the digital asset world. We'll be building on some things we've talked about before, but mostly focusing on the latest key updates.
That's right. The goal, as always, is to give you a clear picture what's moving, why it matters, what to watch, but, without drowning you in jargon or too much noise.
Exactly. We've got some pretty interesting market action, some big institutional news, and some cool tech advancements with NFTs. Ready to dive in?
Let's do it. Where should we start?
Let's kick off with Bitcoin. We saw quite a surge recently, didn't we? Felt like things were a bit choppy, and then suddenly lift off.
Yeah, quite a significant moves. We're talking April 11th, 2025. Bitcoin jumped, over 8%, pushed up towards $81,700.
Okay, over 8%. What was behind that surge? It seemed pretty quick.
Well, the primary driver appears to be that announcement from U.S. President Donald Trump.
Yeah.
The 90-day pause on tariffs for most countries.
Ah, right. The tariffs, but China was excluded, yeah.
Correct. China was excluded, and tariffs there actually went up to 125%. But for most other nations, this pause was announced.
So how does pausing tariffs translate into a Bitcoin pump? What's the connection there?
It really comes down to market sentiment and risk appetite. Those
Yeah.
initial tariffs, they create a lot of economic uncertainty.
Makes investors nervous.
Exactly. Nervous investors tend to pull back from assets they see as riskier. So when that uncertainty gets dialed back, even temporarily with a pause.
The money flows back in.
Precisely. Capital often rotates back into those risk assets. And cryptocurrencies, they're definitely viewed in that category by many traditional investors. It's like releasing pressure.
So it's a macroeconomic thing spilling over directly into crypto. A good reminder that crypto doesn't exist in a total vacuum.
Absolutely. We've seen these kinds of correlations before, where big policy shifts affect both traditional markets and crypto.
And it wasn't just Bitcoin that benefited from this sentiment shift, was it?
No, not at all. The data showed Ethereum and XRP also had pretty substantial gains, both reportedly over 12%.
Wow, 12%.
Yeah, it often happens that way.
Yeah.
A strong Bitcoin move can kind of lift the tide for major altcoins, too. Suggests a broader return of risk appetite across the crypto space.
Okay, so key takeaway for listeners. Keep tabs on those big geopolitical or economic announcements. They can really ripple through the crypto markets unexpectedly.
Definitely worth watching.
All right, let's pivot now. Institutional adoption, always a hot topic. BlackRock and Solana. What's happening there?
Right, this is a really interesting one. BlackRock expanded its tokenized money market fund. It's called BUIDL onto the Solana blockchain. That was announced March 25th, 2025.
BUIDL, okay. And this fund, it's pretty substantial already, isn't it?
Well, yeah. At the time of the expansion, you reportedly had around $1.7 billion in assets under management. Solana became the 7th blockchain they added support for.
$1.7 billion. That's serious institutional weight. So why Solana specifically? Any insights into their thinking?
Well, we can't know for sure without their official reasoning, but Solana is, it's known for its high transaction speeds and relatively low costs.
Right. Performance advantages.
Exactly. Those features could make it particularly attractive for things like tokenizing real-world assets or RWAs, which is essentially what BUIDL does with money market shares.
So putting traditional assets onto the blockchain.
By adding Solana, BlackRock might be trying to tap into Solana's specific ecosystem, maybe explore its efficiencies for RWAs, or just reach a different set of potential users or partners active on Solana.
It certainly reads like a vote of confidence in Solana's technology and its potential, right?
Absolutely. It's a strong signal. It could definitely pave the way for, increased institutional interest and maybe more capital flowing into Solana and the whole RWA space generally. Boosts credibility.
Yeah, makes sense. Another example of TradFi getting more comfortable and more integrated with blockchain tech. Important trend for listeners to track.
For sure. Institutional adoption remains a key theme.
Okay, let's shift again. Let's talk tech innovation. NFTs are still evolving fast. Tell us about this NFT bridge from whale.io.
Yeah, this launched on April 10th, 2025. It's aimed at tackling a common issue in the NFT space: interoperability, or, well, the lack of it sometimes.
Interoperability, so getting NFTs to work across different blockchains.
That's the core idea. Right now, an NFT created on, say, Ethereum is often kind of stuck there. This bridge from Whale.io is designed to create pathways, allowing NFTs to move more freely between different networks.
Ah, okay. So, like, if I have an NFT on Ethereum, but maybe want to sell it on a marketplace built on Polygon because the fees are lower, this bridge helps with that.
Potentially, yes. Think of it as a translator between the different technical standards of various blockchains.
Gotcha. So, what are the main benefits for someone holding or trading NFTs?
Two key things, really. Potentially increased liquidity and better accessibility.
How so?
Well, liquidity, because if you can move your NFT to a chain with a more active market or more potential buyers, you've got a better chance of selling it, right?
Right. More eyeballs, more potential bids.
And accessibility, because NFTs that might be stuck on a less popular chain could now find a broader audience on more established ones. It just opens things up.
That could really help make the whole NFT experience smoother, less fragmented. Feels like a necessary step for the ecosystem to mature.
I agree. It definitely pushes towards a more connected, user-friendly environment for digital collectibles and assets. It fits that broader trend we see in DeFi and NFTs, this drive for better connections between platforms.
Feels like one of those aha
Yeah.
moments for the tech. Okay, good stuff. Now, let's briefly touch base on the regulatory front. Anything major shaking out there recently?
Always important to check, even if it's quiet. In the specific 24-hour window our sources focused on, there weren't major reported outcomes from the Dokron court hearing.
The Terra Luna situation, that hearing was scheduled for April 10th, right?
Correct. What we do know is that prosecutors are apparently still reviewing new evidence. So that's very much an ongoing situation. No final resolution reported in that immediate time frame.
Okay, so still developing. That case obviously has huge implications. Anything else on the broader regulatory scene in that specific period?
Interestingly, no other major regulatory shifts or rulings were highlighted in the sources covering that immediate window. But, that landscape changes constantly.
Always. It's something we just have to keep monitoring continuously.
Absolutely. We'll definitely keep tracking it in future deep dives.
Okay, so let's try and pull these threads together as we wrap up. We've talked market moves, institutional plays, tech advancements. What's the big picture here?
I think the big picture is seeing how interconnected everything is. You have these external forces, like the tariff decision, impacting market sentiment.
Right, the macro influence.
Then you have the steady march of institutional adoption, like BlackRock embracing Solana, which signals growing maturity and acceptance.
Building credibility.
And layered on top of that, you have the internal innovation, the tech itself evolving with things like the Whale.io bridge, making the whole space more functional.
So it's not just one thing driving the market. It's this complex mix of geopolitics, big finance, and pure technology development.
Exactly. They all feed into each other, shaping the opportunities and the risks. Understanding that interplay is, I think, really key for anyone involved in crypto.
Yeah, looking beyond just the price charts to see the underlying drivers. That's what we try to help with here.
Precisely. Giving you that informed perspective without requiring you to sift through everything yourself.
Well, hopefully this deep dive achieved that. Gave you a solid, clear update without overloading you.
That's always the goal. A shortcut to being well-informed.
Okay, so before we sign off, here's that final thought for you to chew on. We see traditional giants like BlackRock wading deeper into crypto. We see global events still swaying prices. Looking ahead, what do you think is the single biggest opportunity, or maybe the biggest risk for your own crypto holdings in the coming months?
Good question to ponder.
Give it some thought. Maybe let us know what you think. Until our next deep dive, thanks for tuning in to EcoWealth Lab. Stay curious, everyone.
Until next time, take care.